Hello and welcome. You've tuned in to CNBC TV 18 Prime. Let's get cracking on a brand new edition of The Big C from the CNBC TV 18 Prime iconic Wealth Studio. I'm Manisha Gupta, back with your daily dose for commodities, crypto and currencies. But before we go to our guests, let me get you up to speed with the global market action. The stocks on Wall Street ended Friday's trading session higher, rebounding from previous session lows after the Fed president suggested a rate cut is linked in December. Well, meanwhile, markets in Asia also trade largely higher, mirroring the cues from the Wall Street on Friday. Stocks on the Wall Street trading within a range in the meanwhile. Crude oil prices have settled down to the lowest level in a month as U.S. pushes for a peace deal between Russia and Ukraine. This is going to be the fourth monthly decline for the crude oil prices, and crude is down by 3% in this month already. On the currency front, well, the Indian rupee declined to its all-time low levels on Friday, touching almost 89.48 against the US dollar. On the back of weakening risk sentiment, the absence of strong dollar supplies from exporters and steady hedging demand from importers had also added to the downward momentum. Joining us is the first guest of the day, is Jonathan Barratt. He's CIO at ETO Markets. Jonathan, hi, thank you so much for joining in. And first of all, on the currency markets itself, because the dollar index is trading at around 6-month highs, we are holding above 100. The markets have read into whatever data that has come in from US, and the probability of a US Fed rate cut for the month of December seems to have jumped to almost 70%. How are you reading the changes that we've seen come in for US and the impact that we see on the currency?
Manisha, good morning. Look, if anything I think the dollar index has been in a range for some time. It actually traded quite well. We haven't seen massive moves there. A lot of the commodities have actually moved by their own impetus, but I think the currency's been quite well trading within a good range. I think the interesting thing is that the market now is factoring in, as you mentioned, that 70% chance that we will get a rate cut. Traditionally, that should have caused a little bit of weakness, but I think with the dollar sort of relatively stable, I don't think it's sort of playing too much of a mark. I think the market will be disappointed. I also think the Fed will be really keen to see what the data out this week is, how that will affect and how that will shape things. Remember, it was only last week that we went down to 50% for a chance, and of course on the close moved up to 70%. So I think let's see what the data says this week. There is quite a lot. Remember, we're playing catch up after the government was shut down, and I think the Fed will then start to make some pretty iconic decisions.
As volatile it continues to be, Jonathan, but what is your sense on where the dollar index perhaps could be headed in days to come or by the end of this year?
Look, I think if anything, you've seen the dollar index sort of slowly firm. People have traded towards the US dollar. I think if we can get through this 100, 120, 30 on the index, I think it has more in the top side, but I think there is a lot of resistance up around that 101 or 102. I really feel at the end of the day that that currency should not be as strong as it should be. In fact, I think it should be weaker. So if anything here, I think any push to the top side will be quite temporary. I do actually see towards the end of the year that the market will be lower, but still within a range, head back down to the lower end of the range, around that 95, 96 level for the index.
Coming on gold and silver prices, Jonathan, because we seem to be trading in a very, very tight range, as it were. Gold isn't moving much beyond that 4,000 to 4,150 perhaps, and silver also seems to be around that $2 of a range. Has everything been factored in? Is this market taking a pause, resting it out? How have you read the fundamentals? Would you say everything clearly has been factored in that there was to, and markets are waiting for more development now?
Manisha, I think markets are looking for more development, but remember we've had such a meteoric rise for gold for such a long time. There is no harm in it actually resting, and that's what I think it does. It hasn't yet told us that a top is in place. We haven't had any major spikes to the top side. I'm still encouraged there will be something out there that will cause. As I said, I've got that bearish feel still on the US dollar. That will support things. We've still got a lot of macros out there. We've still got to consider, and I think that'll support prices. But at the moment, I think gold is just resting. I still feel that it's got that propensity to trade to the top end towards the end of the year, and quite supportive at these levels. We're currently long. Happy to be here. If we can actually anticipate a move down to 39.70, and we're still bullish even if it gets down to that level.
So if you were going to buy at 39.70, 3,900, Jonathan, what kind of targets are you working with then for 2026 for gold and silver both?
It's the same targets we've had. We still feel that it looks quite positive to the top side. Still want to see a test of 42.50 again. I want to see us whether or not we're going to make it to those record highs. And Manisha, if it moves up to that level, it's good because it's going to tell us whether we've got a major top in play
Mm.
or whether or not we're going to sort of see more consolidation. So whichever way it is, I still think the themes are out there. Central bank theme, dollar theme. I still feel that there's still risk out there in the market. So it'll take a little bit of time. But as I said, in the interim, a push higher to tell us whether we're into a new trend or we stick into consolidation.
When it comes to silver, Jonathan, and there is more than just about safe haven buying and financialization of a commodity here, it's in deficit. The industrial demand is anticipated going forward. What is it that you think would work for silver in the new year?
I reckon basically, if we see how China goes with its developments, with its macros, let's see how their green economy starts. Remember, they are pushing a very aggressive agenda on this side, and I do think that demand will come from that. It's a story we've had for some time. Remember, silver is always 100% volatile, but at the end of the day, I still think it and like it to go higher. Obviously, we're trading at these levels. I think back to 52.50, maybe even a little bit higher. Still want to see it up to that 55. And that's obviously in line with my bullish call that I have on gold. But generally, still quite positive on the silver price. Still going to be quite volatile. We know that, and I think it's just got to be a little bit wary in terms of how you trade silver. Just under that $50 an ounce now. Maybe a little bit lower, but overall, I still think it's a good buy. In fact, more of a standout player than actually gold.
I want to talk about overall metals with you, Jonathan, but I also specifically want to talk about zinc because I was reading a lot of data and it suggests that while we are, of course, in a deficit and we've seen a very sharp decline in zinc inventories on LME, it clearly is two worlds right now because China is working with a surplus. Ex-China, the rest of the world is in a deficit. And we've seen those numbers perhaps for the most part of this year. How would that really augur for zinc going forward? Because the markets do believe that Asia restructuring and the construction demand perhaps would be big support. So would be the case with the galvanizing demand, etc. But from here, as many people are putting out a bullish zinc overview for 2026, where do you stand?
Look, I think we've got to be bullish, and we've got to make sure with the macros, particularly out of China, fit. One of the tiresome points is that when everyone goes long, it normally doesn't go the way you want it. But when the market's as weak as when you want to go in, that the deficit's not going to go away, and not going to go away for some time. So if we do get a clean out, then that represents the opportunity to buy into it. So I generally like that whole story about the base metals. Zinc is obviously a standout. Copper's another standout. It's a story we continue to like and develop along with that growth out of China. Remember, we've got some good data out this week in China as well, particularly on Sunday. So hopefully that'll tell us exactly what we want to hear.
So when you say that you're bullish across base metals, Jonathan, is there a one and a two that you are looking at within the space where you're more bullish on and not so much on the others?
Look, I tend to gravitate. Always love copper. We know that deficit there. We know the market's trading in such a way that suggests that we've got a short-term spike here. I think overall, generally, that's once again, it's a deficit thing. Or any of these economies which are starting to move, will actually feed right in. We just keep an eye on LME stocks, see where they're at. They're all showing the same signs. So at the end of the day, I think when you look at it, still like copper because obviously it's the litmus test for the economies. But obviously zinc is a bit of a standout because we can see the numbers. So if things start to change, we'll just go straight into those base metals.
How are you looking at the crude oil prices on it, Jonathan? Because we're looking at a monthly high, monthly low rather into this one. 4 months of constant decline. We're down by 3% for the month of November as well. 18% down for the current year. Third straight year of declines. I mean, I can go on and on with the bearish cues that the crude oil prices have given us. But are we anywhere close to bottom right now?
Look, Manisha, I've always liked crude at these levels. And I know the market is saying, well, okay, if the macro story changes, Russia will put more oil out there. Let's see how that develops. We know what's happening in the Ukraine. I guess I get a lot of support from the technical picture. When I look at Brent, 60 is a huge level, 6200 is a huge level, and if we break through on 65, it's another thing. If purely on the technicals, we'll have a breach and a pullback. Either way, you're getting into this real refined little corner to trade. I would prefer it to trade to the top side, But if it takes out, as we said, that 62 and then 60, it's another game altogether.
The report from World Bank, Jonathan, says that the commodities haven't done so well. As in, if they look at the overall index, and of course, not all commodities have done so great because agriculture has been a different scenario altogether, where we've seen more declines than gains there. So overall, when you look at the index, yes, it's a bit of a decline there. The World Bank report, coming back to that, suggests that that's exactly how it's going to be in 2026 as well. A mixed bag and not exactly too much gains there. And then you have equities which are overstretched. So what is it? What play is really going to come into being for 2026? How are you looking at various asset classes and where does commodity feature therein?
Look, I would like to roll out of some assets in the States, equities. Obviously, you always have to have some, but I do think the A1 stocks are a little bit of a stretch, like everyone else. Although I did note Nvidia's profit and loss showed us actually that the sector is making money. I do think that the whole equity market remains a little bit overstretched, so I would try and rotate out of that. I do like some of the commodities, as you know, the gold, silver. One of the standouts for me is actually wheat. Wheat just hasn't moved at all, and I do expect some lift in that towards or throughout 2026. It's on a major low, and that's something we've been long and we're quite supportive, purely from a lot of reasons. But one of the main one is that climate issues in the food bowls. If they're not producing, it's going to cause a bit of a squeeze. So I guess when anything, it's the commodities I love, as you know. The gold still trade, the silver still a trade, copper, zinc, and also wheat.
Since you said wheat, what are you looking into that one? Because at this point in time, the wheat in the global markets in sense of inventories or supplies does look good. What is it that you're looking at to be bullish on that?
Well, I think when you look at it, wheat's been in a range for quite some time. And when it does form this way from traditionally, and I do know this because I've been trading it a while, when you go back and you look at it, it's in a narrow range. And that range is getting narrower and narrower. I think on a bushel, per ton bushel, 500 is massive support for it. It's been down here so many times, it always bounces back up. And when you look at ending stocks or global ending stocks in wheat, you get a sense that that could turn around very, very quickly. There's a lot of weather out there. It's always an issue. And if we can get through or just hold these levels and then 550 on the top side, then I think it's a break of a terrific trend. And I think wheat will start to continue to trade higher.
Well, that point is well taken. Jonathan, as always, thank you so much for joining in and making sense of what really is happening in commodities and the overall global macros as well. With that, we'll slip into a short break. More on cryptos on the other side. Stay tuned. Welcome back. You're with us at the Big C on CNBC TV 18 Prime. Ajeet Khurana is founder of Reflexical and joins us now on the show. Ajeet, hi, thank you so much for joining in. And 4 weeks of constant decline when it comes to crypto. There's no stopping. We've seen break of $85,000, perhaps $80,000 as well at some point in time, very briefly on Friday. How are you reading this complete sell-off that we've seen from 126,000 to 80,000?
Conversation with you and you'd asked me similar questions. I had said that medium to long term I remain bullish, but breaking 100 in the negative side is very likely, and we have seen that and how. I personally feel that while different asset classes may have different fundamentals, but all of them tend to be correlated with the money in the market. And especially last week with the FOMC reducing rates in December looking like more unlikely than likely, I think that is where the real bad sell-off happened, and that seems to have reversed. Despite the fact that this is the first time when in a 30-day period, only 6 days saw a net inflow in crypto ETFs, and that too, that is Bitcoin ETF. Ethereum ETF was worse. One very interesting trait that has not been talked about is that while the asset under management of ETFs has been falling in the last month, but AUM as a percentage of market cap has been rising, which means AUM has not been falling fast enough to keep track with the market cap, and that remains the fear.
All right. With the way things stand right now, there's a lot of conversation around, and this perhaps is not the bottom, and we could be looking at prices going down to 73, 70,000 perhaps as well. The sharp decline that we've seen and the whole month of that, as you said, only 6 days of inflows in 30. Are we preparing? Are we readying for a further decline here?
So if we are taking a somewhat shorter term view, if Fed does not lower interest rate, we are going to see a bloodbath. Even without that, we could see negative sentiment. However, there is one thing that could give us a spike, and that is currently the open interest in the perpetuals market has risen. In the last few days, it has risen by 6%, now approaching $1 trillion. And as you may know, that funding rates remain negative only about a third of the time. Currently, funding rates are negative, which means in the perpetuals leveraged market, we are seeing great amount of pessimism. This creates a situation for a short squeeze. If that happens, we could see a momentary spike in prices also.
Ajeet, I absolutely get your point on the long term versus the short term here. So, well, short term, yes, there is a pain. Long term, if I compare it to last year, we still are in better numbers here. And of course, when you look at the last 3 years and 5 years of an average, absolutely on the positive side there. But, you know, every time you see a decline, it's a different world, really. Wouldn't you say, Ajeet? When the prices are going high, people start calling it a froth. When it starts to come down, they say, oh, I told you so, it was going to go down anyways. How do you deal with both sides here?
So the interesting thing is that volatility is what we are talking about. Namely, suddenly, like if you look at last 24-hour highs and lows, they are ridiculous compared to, let us say, something that you would see on a stock market. And that is why people haven't yet come to terms with this asset class, especially because now ETFs as a percentage of market cap are around 7%, which means people in the stock market are a significant influence on the crypto market, and the percentage just keeps increasing. The people in the stock market are not viewing crypto in the same way as original crypto degens did, who seem to have almost some sort of a religious belief that this is an asset that can only go up. Stock market investors are taking a relatively more rational view, though obviously even they are not fully rational. So you are absolutely right that sentiment is driving this sector a lot.
And it's not just the crypto prices as per se, Ajeet, because when you look at the real world assets, or you look at the DeFi numbers, the funding data, open interest you've spoken about, there's a bit of a hit across the value chain, would you say?
That is correct, because when money moves into this market, the overall crypto market, all of those things look rosier, and when money moves out of the market, all of those take a hit, which is why I think over the last several months, all the logic in the crypto market has been liquidity driven. How much money is there in the market, not how the fundamentals are looking.
And do you see that changing anytime soon?
Yes, actually, I personally cannot see a situation where ETF inflows remain negative for a long time. I cannot see a situation where interest rate remains so high in the US for a prolonged period of time, regardless of what is going to happen in December. But given that both of those are going to turn favorable, and that too very shortly, I think that prices will also turn favorable.
And it's not everything is negative, Ajeet, because I was reading the last 24 hours and the kind of news that seems to be trickling in from everywhere. I mean, MasterCard simplifying crypto addresses with Polygon there. You've also seen Coinbase introduce Ether-backed loans for US users. I mean, there is stuff happening into the space.
You know what is interesting on what you say, as far as utility, which is what you're talking about, utility is shooting up in this space. But pretty much like prices shot up for years in the absence of utility, we are crazily noticing that though utility is shooting up, prices are not catching up with utility. So I think there is a lag in both terms. One interesting development, however, is Coinbase, which is a listed US exchange listed in the US, recently started issuing tokens of third parties and has had its first ICO, which is the initial coin offering, and that has gone oversubscribed and done pretty well. That closed just yesterday morning.
The kind of developments, as you said, the utility case continues to be on the higher side. I mean, we've seen Dubai do that. I recently met somebody in Gift City in Gujarat who's also talking about reality tokenization within that as well. So there are things happening not just outside India, but within India as well. Is this real world asset tokenization as a theme, as a product, you think would do quite well going forward?
I think it is inevitable. The only thing holding it back really is the regulator being ready for it. However, regulators everywhere, including in India, have talked about looking at it. There are sandboxes being created globally. And once it is clear that you can hold token as a representation of the ownership of the underlying asset, and this will be valid in the court of law, we will see a tsunami of RWA tokenization.
2025, Ajeet, has come and gone, and we yet to hear anything on the discussion paper or any kind of regulations, reforms in India.
While you're of course right, and it is huge cause of pain, but it is not as huge a cause of concern because silence, speaks loud. So the fact that, I'm the old school guy who has been around for now a decade in crypto. Often when you don't hear negative news, you regard it as good news.
All right, I'll take it as that. We've spoken about Bitcoin so much, but that's exactly the kind of sell-off that we've seen various in other altcoins as well. I mean, Ethereum is down 45% from its August highs. We've seen that exactly the same thing happen for a Solana and a Cardano and a Polygon and an Avalanche for that matter. The kind of sell-off that we are seeing across and the kind of market cap loss that we've seen almost to the tune of $1.5, $1.7 trillion therein, what does that do for the sentiment?
So very interestingly, Bitcoin has positioned itself as a store of value, which means Bitcoin already possesses all the functionality that it claims it will have. All the others that you listed, and the list could be longer than that, came up with specific utilities like smart contracts, RWA tokenization, and what have you. And that is where they are not performing well enough. So I personally feel that their fall is correlated to their fundamentals. Bitcoin's fall is correlated to the fundamentals of the market and liquidity. As a result, Bitcoin hasn't fallen as much.
Ajeet, the final question, and while 2025 would be known for a lot of things, whether it is an all-time high or the kind of deep correction that we've seen in this quarter, the other thing has been about various reports suggesting that the number of hacks and highs that we have seen in 2025 also perhaps is a record.
We can't help it, but Bitcoin or all of crypto is a bearer asset. And pretty much like you carrying tons of cash in your pocket or gold on your person, you run the risk of it being taken because they are also bearer assets. Crypto is also a bearer asset. You could use custody providers, etc., and the like, but most people continue to use it as a bearer asset. And as long as that is the case, we will continue to see these hacks.
Well, that is about on what 2025 really has been. Ajeet, again, thank you so much for joining in and making sense of all that seems to be happening within that space, and not a dull day or a dull moment really when it comes to crypto as an asset class. But thank you so much for your time today. And with that, it's a wrap on this episode of Big C. Thank you for watching.